Okay, we should be live. You know, my laptop setup is very precarious, duck. So every second of working technology is a gift in itself.
Yeah, but it seems to be working from what I can see.
So now you've heard both of us. Good evening, everyone. If you could let us know about how I sound, how the duck sounds, too loud, too quiet. I say that as if we're in a position to fix anything, but I suppose it's still good to know, right?
Yeah, I mean, it's at least something, right?
Exactly. Ooh, Tenacious says perfect, and Crypto Orion says sounds fine for me. It's perfect. Maybe I should just move to this setup forever, Duck. You know, why be at home when I can just
No,
have a
the
laptop?
screen's smaller.
Yeah, true.
The home setup's better, but
I agree.
it's
Cool.
good
I think we
enough.
can get rolling though. First things first. Thank you to Bybit for sponsoring Technical Roundup. It's another week and another session without having to force ref links for performance gauges. That's quite nice, isn't it? So thank you to them. Their links are in the description below. If you want more Bybit, leverage trading, whatever specific content, let them know. And I'm sure we can have a chat and come up with a fun and exciting series for you, even though that's pretty much exactly antithetical to Casual Friday. Second thing, leave a like on the video if you enjoy the content. We are also very close to 10,000 subscribers, which is quite mental, actually. The support's been awesome and steady growth, despite my recurring failures to offer weekly non-live stream videos. Do you remember that promise, Duck? Neither do I, it's okay. And the final thing is the Technical Roundup newsletter, where Donald and I just fight over Discord DMs on what to write in one voice. That comes out every Tuesday. It's also sponsored by Bybit, and the link to that is in the description. So if you don't want to hear two fake friends who pretend to like each other for business purposes ramble 3 times a week on video, you can just read those rambles in PDF format. Did I miss anything? I don't know where Donald's gone. Hello? Chat, any signs of life from you? I think my awful jokes just turned him off. He's like, you know what? I don't get paid enough to deal with this. Okay, apparently, well, we've got me. I don't know where the duck's gone. That's unfortunate. Don, if you can hear me, it was just a joke, bro. Please come back. I think you're muted, but that's what Google Meets is telling me. Anyway, I can do a one-man show for a bit. No problem here. So, I hope everyone's doing well. We can recap a little bit from what we covered in the last session. Oh, I think I can hear you now, Duck. Hello?
Does this work?
Yes, it does.
Okay, I'll just use this one then.
I made 2 jokes. You didn't even laugh once. I'm like, come on, dude. This is supposed to be a joint effort. You know, we're on here together.
No.
Why are you throwing me under the bus like that?
My microphone died, so I had to use another one.
Nice. It sounds just as good, if not better.
Really? Okay, good.
How are you doing?
Good, good. How are you?
Yeah, pretty solid. Market's been certainly interesting, behaving well for the most part. So I think I'd love to get your opinion on as well. But yeah, you know how it is.
Good old Friday. Yeah,
Good
I
old
mean,
Friday.
I'm pretty much in like a food coma. I just had like a bunch of Chinese, so I'm just sitting here being all lazy.
Do you have any
But
Peking duck?
no, I've been eating vegetarian for most of my days now in the last like
Great, we
few
just
months.
lost 400 subscribers. Thanks very much.
Yeah.
That's all
No,
right.
but all good, all good.
Nice. How's this market been treating you? You know, you were bearish the whole way up, so I don't know how you're still alive and liquid.
Come on, come on. No, it's been good. It's been good. Like I like the drop was pretty nice. I mean, I played that pretty well, and then yeah. I mean, I'm glad that I'm not short anymore, but I'm not entirely sure if I want to go long or not.
Sure. I
That's
think what would be
kind of my
cool to
view.
do, since we chatted, or I chatted to the audience on Wednesday, give a quick update on stuff, how it's moved since then, and then maybe you can run us through your short exit, and then also what you're looking for moving forward. Does that sound cool?
That sounds cool, yeah.
Nice. Can you imagine if you said no and I'm like, you know, make this whole intro? Does that sound good? You're like, nah, dude, it's the worst idea I've ever heard in my life. Anything but that.
I
Cool.
mean, at least, yeah. Go ahead.
So on the monthly time frame, as we discussed, and I'm sure this plays a part in the Ducks current logic and reasoning, feel free to jump in and interject, by the way, as I
Yeah.
go through. But on the monthly, it's still kind of operation save the monthly close. And we pretty much covered in last session how I think trading high time frames is kind of a privilege in many ways, because the amount of ideas it generates, certainly if you're limited in the markets, number of markets that you trade, you don't really get to trade all that much if you're being super strict with high time frame swings. My system compensates for that by giving me low time frame and high time frame trades using the same levels. But if you're purely kind of high time frame swing, weekly close, blah blah blah, you're not trading a whole lot simply because of the time frames that you're dealing with. So on the monthly time frame, again, we're in the final week of trading, last full week of trading before the monthly close. This could just end up being a long drawn out monthly bullish retest of support at 10.3/10.7 before moving higher. I'm not entirely sold on that from a, I guess, narrative or disbelief point of view, but at the same time, as time goes on and we see the ETH driven narratives becoming kind of less credible, right? It's like ETH and DeFi, like, okay, I can roll with that. And now NFTs. If the markets are going to continue higher from the monthly close, I think I would be more comfortable with a Bitcoin-led rally, which, a lot of participants might find themselves underexposed to because, they're staking and yield farming and doing all this stuff, participating in the Ethereum ecosystem. There has been some wrapped BTC and all this other stuff, TBTC, I think, coming out recently. But I think if markets run higher, I could certainly see an argument for it being Bitcoin driven and a kind of FOMO chase up to those with lower allocations than they would have otherwise, simply because of where the incentives have been with Ethereum. Do you have any kind of similar views or completely disagree? Anything on that?
Yeah, I completely agree. What I've been seeing, right, and I mean, I have limited data right now, but what I've seen is that a lot of people are actually very happy sitting in stable coins, farming with those, like yield farming. Then there are also a lot of people that just have been taking profits, getting out of the market. So the question is, okay, is that gonna, like, are they gonna come back into it or are they not? And if they do, like if there's a FOMO rally going on, I think there's a lot of fuel just because a lot of people are sitting on the sidelines.
Mm-hmm.
But the question is, okay, are they actually gonna, or is it just like fizzling out? Which I could see as well, right? So you could also say, okay, we're just this rally is kind of fizzling out, slowing down, and people are happy to just not be exposed. And then if you don't find new buyers and then don't start going up, we could go lower. But I think, it's pretty like, why would you, like, if you get a rally, I think it makes sense to focus on Bitcoin just because people have very little Bitcoin exposure right now, I think, in comparison to what they usually have. So it just makes sense that if we get a rally, a market-wide rally, it's going to be Bitcoin focused instead of something else.
I think that's fair. Do you think there's any merit in arguing that, at least in the past, when you were hedged or out of the market, at least from our circles or my understanding, whatever, those positions would be established by taking a one-time short on an inverse future, right? And when you buy that back, you essentially get Bitcoin exposure immediately. Whereas in stablecoin cases, you might have to, as in there's a difference from being tethered or hedged via an inverse Bitcoin futures contract, as opposed to just having a bunch of stablecoins and then having to rebuy. Do you see any meaningful difference there? Because I know even in the past couple of years, I feel like the whole being hedged and being in stablecoins, that's relatively new, right? Like we used to just completely, a bit earlier, like 2018, you would ride or die with your Bitcoin exposure. I think at least compared to how it is now, the whole idea of being hedged, tethered in stable coins, etc., that's really a somewhat recent, in relative terms, phenomenon for a lot of market participants. At least that's my view of the matter. Don't know if you agree.
Yeah, I kind of agree.
Okay. So yeah, that's the monthly, I guess, Operation Save the Monthly. I really hope if we are bullish, which would mean a close above 10.7. It's not one of those, okay, close above 10.7, then we spend the next month retesting it, that type of just grind at the same level. Because like we had to close above the level here, then we closed above it again and tested it, and now this is the deep retest of the level. I know you're generally not a fan of immediate break and retest type of stuff. So I don't know if you agree that if we get a bullish monthly close, I'd expect momentum to follow on like pretty closely in the next week or two, as opposed to just more monthly chop around these
Yeah.
levels. That's my
Yeah,
preferred.
I think the same. The problem is that we could also just put in like I think if we close like this on the monthly, it's pretty likely that we actually get a bounce. The question is the bounce just going to take us to like the close of this month
Yeah.
and then just get rejected, or is it actually going to have like some steam behind it? Very tough to answer right now, I think.
Yeah,
But
someone asked about like monthly trouble areas. I think if you're being conservative, what the duck's essentially saying is the the close of last month, right, which comes out at
yeah,
11,655. I think that's valid for me. If this were any other time frame, all that type of stuff, I typically do something like we've spiked previous month's low into support, and so your first kind of trouble area on this time frame is previous month's high at 12.4, 12.5. And I think if we get that high, then I'll be hard pressed not to find arguments for the next monthly resistance, that holy 14k level, right? This could just end up playing out like as one of the most obvious quote unquote bullish retests ever, right? That's still very much on the table. But as we've experienced in the past month, it's way easier analyzing it in hindsight. Like, oh, close above, retest, blah, 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 spike, and then goes up. But if you're there trading that chop and seeing the 10% drops day in day out, it's never that easy, is it?
yeah. I mean, trading is very different from analyzing. Like a lot of people are like, okay, this is so obvious, but then where do you put your stop? How do you manage it? All that kind of stuff makes like that's actually the difficult part, right?
Especially at high time frames, right? Where it's like it's reasonable for price to spend literally weeks in your entry area, and like it bounces in week one and then entirely mean reverts back to the level. Then you have to sit there thinking, all your UPNL is gone. Have I been invalidated, or is this just like a retest that's taking its time? Am I selling the wick? Like there's a lot of stuff that's really difficult with higher time frame trading. I think yes, you get the clarity of really nice levels and invalidation a lot of the time, etc., etc. But the actual trade management process, I feel, is where you can lose a lot of money. But like, even if you can have the right idea, but still lose money on execution and management with high time frames, because just having the mental capital to see the retests of your entry and literally being in that position for weeks without being rewarded, especially if you have like lower time frame strategies that you can compare it to, where you get that more instant gratification. That's certainly something I've wrestled with in the past, and continue to do so. But that's the monthly time frame. I think that's enough on that. On the weekly, again, using those monthly levels, I have this kind of shelf at 10.3, 10.7. And in the last live stream, we were at 10.3, looking for a 10.7 bounce. I think during the session, it actually closed the 4-hour, or what the hourly closed below 10.3, and I was looking for a reclaim long of that. So I suppose since this is a concept I'm going to reference a lot, when I say like something risk defined, like an effort to break a level, then get back above it, etc., like a lot of the time I understand that type of language is just super convenient to have an explanation for any technical move that happens. Like, oh look, I called it, and then price nuked by like $1,000 and then closed back above the level. It's like, yeah, this is exactly what I was looking for. It's not the most useful thing in the world, but in this case, this is one of those instances where this is like a poster example of what I mean by an effort to break a level, which then fails. And it's this price action here. You get the closes below the level. So the big scary candle that closes below it. The follow-up to that is kind of a pin bar type of structure. And then you get the close back above the level and the same structure being used as support. And when I say risk defined, it's essentially the violation of the structure that then gets reclaimed. Because if the idea is correct, there's no reason a failed breakdown should get revisited, or at the very least new lows should be made, right? This kind of price action I was talking about, didn't manage to get on board this move for really annoying personal situational reasons, but the technicals are very much there. And for me, look, until proven otherwise, we're still within this monthly, like using these monthly levels as a range, 10.3, 10.7. We've gone from the range low to the range high, and that's kind of the move completed for me. I know there are some very valid daily time frame arguments for looking at resistance at like 11K. But as described in the previous live stream, for me, this shorter term break above the level, which failed, is the, failed breakout attempt, the deviation, or whatever you want to call it. And now we've got real resistance, or resistance back at the original level at 10.7. So for me, that's the resistance level that really matters. You could be a bit more generous and use this entire pre-breakdown consolidation if you wanted to, which, again, 10.9, 11K. But from a high time frame point of view, I think 10.7 is more reliable. So for longs, now that we've gone from support to resistance, as per the previous live streams, any break through this area with consolidation that then moves higher, or even like a break, retest, and, similar positive price action as we've covered countless previous times on lower time frames, I think there's a move to get on board towards 11K, maybe even the 11.4K weekly level. I think that's all I've got kind of for Bitcoin. Same levels as last live stream. Nice bounce from support to resistance, but I'm going to need to see 10.7 break before I shift my mindset from just ranging between high time frame levels to some sort of high time frame bullish move. That's kind of the follow-up from the session for me. By the way, Duck, you might need to help me out and keep an eye on the chat generally because of my one-screen poverty setups. Let me know if anything fun or spicy comes up there, but that's all I've got for now.
Yeah, a bunch of people longed your trade idea 20x.
Did they? Oh, that's so not fair, man. I'm just about to start spamming the donation address, to go buy my shisha after the live stream. That's a joke, obviously, but, like the video for more trade ideas, woo, that type of thing. Well, you know what? Being, the long idea from 10.3, 10.7 certainly beats the long idea of 11.920 to total humiliation. What are your thoughts on that?
I mean, yeah, definitely.
It happens to the best of us, right?
It happens to the best
and
of
to the
us,
worst of us as well.
And I mean, it stayed in the family, right? I mean,
exactly.
I shorted your entry, so it's like.
Yeah, it's like you never really own a Patek, Philippe Patek or whatever that watch. It's like you merely hold it for the next generation. It's the same thing. Just one company director buys the top and it's exit liquidity for the other one. Fucking great. Do you want to show us your Bitcoin chart?
I can, yeah.
Let me make sure I know how this works. Hold on. Setting, change layout, and spotlight. I think that's it. Yes.
Yes. Okay.
Yes, good. I got
it. So for the monthly, like Cred said, we're in an area of support. And in general, like how I usually play, it's like you can't really deny the fact that this has just been like a crazy rally, right? And it's really hard to call tops on these. So generally speaking, when I see something like this where support actually holds, and I mean, we've had a shitload of selling. We had like the SPX dropping, the dollar index going really high, and we still couldn't break that support, right? So when I see that, I generally expect like a move from support to resistance. I do understand the argument that a lot of people are making, like on the macro scale, that like we're kind of in a shit position globally, so it's really hard to be bullish. And I mean, I get that, but like just based on the chart, we're in an area of support in an uptrend, right? So it's really hard to just say, okay, let's ignore that and just keep on shorting. That's at least for me, right? So I don't want to keep holding shorts when I see support come in and actually people buying stuff, right? So like monthly at support, weekly, same kind of thing, right? Where we had this massive level that broke to the upside. And I was like, okay, it's probably going to be a trap. Anything above that level is probably going to be a trap. And that kind of played out, right? But what I didn't expect was that we would find support here. I thought we would just go back down from there, like rally into 10.5, 10.6, and then go down. But instead we found support and then broke the 10.6 level. So above, like we broke the resistance that we have here at 10.6, and now same kind of deal. We're flipping that into support. Doesn't have to hold, obviously. It's still like everything is super uncertain right now, given, like I said, like the situation in the traditional markets. But like just from a charting perspective, I mean, that's the monthly at support, that's the weekly at support, right? So whenever I see that, and then in combination with the incredibly bearish sentiment on all social media and in the market, if you look at funding, because I mean, that's a pretty good indicator for how people think about the market. That makes me think price is probably going to go up. So, I mean, it makes very little sense for me to just hold shorts, right? So I was short from 12K, closed a bunch at 10.3, closed the rest pretty much at 10.6, 10.7 into the support level. It dipped way lower and people were starting to make fun of me, and now it's back higher. I don't really like, I mean, if this breaks down, right? And I mean, I could see that happen. That's not a big deal for me, because like, if you just do whatever you think is going to happen, right? You don't need the charts. If you just ignore the charts and it's just like, okay, we're at support, I'm seeing buying come in, but I think it's going to break down regardless. I mean, you don't really need to watch the charts, right? You can just do it on gut feeling. So I
it's
do
intuitive
both.
trading at that point, right?
Yeah, and I mean, that's fine, right? A lot of people do that really well. I mean, most people do it really shitty, but there's a few people that can do that really well. And I would say, like, I oftentimes do that too. But when I have the monthly at support, the weekly at support, and then have the daily at support as well.
Was that when it was at the bottom of the range, or right now at the wick, green wick?
No, I'm talking about the bottom of the range.
Okay.
And I mean, you could argue, like, if you drew like this, that's fine too, right? So you have like these two support areas here. The first one held for a day and then broke down, but got immediately reclaimed. You have a lot of strength there. And I mean, the lower one just held pretty much from the get-go. So in that kind of situation, right, when I have like supports on all time frames, and then I see negative funding and see the sentiment, and then like on top of that, I noticed that like there's a lot of people just bearish on Bitcoin because of the traditional markets, instead of like, okay, this thing is bearish in itself. That's danger territory for me. That's why, like, there's a couple of reasons why I closed my short. And I mean, if I was more bullish inclined in general, I definitely would have longed this like pretty big time, but I don't want a big time long above 10K. So, I mean, I bought a little down here, sold it pretty early again to wait for the weekly and monthly close, because like while I'm talking about, okay, we're at support, I want to see that confirm, right? Mm-hmm. So for me, like the monthly here, that's 5 days to go. I want to see the support hold for the next 5 days. Because what could happen, right? We get a massive crash in the next 5 days, close below the support. And then, I mean, I would expect the price to go to the next support, which is at 777, right? Mm-hmm. And the same with the weekly, right? We could just fill this wick back in, and then we would have had a fake out above this level instead of support holding. So that's why I'm like, okay, I wanna see how this goes, because like a lot of people, like a lot of other people, like I'm not entirely sure where we're headed in the traditional markets. And since we're so correlated, it's pretty tough to call. But like based on the chart alone, looks pretty good to me so far anyway.
I have 3 questions. Could you believe that? 3 questions. Okay. I'm hoping they're valuable for the audience. Maybe not. Maybe it's just in my head. The first is about the weekly time frame, right? Mm-hmm. So do you see that top red line above which you said, you know, if price gets above that, that's a fake out / where cred's going to buy, right? And now that materialized, and that level got, you know, fake out, and then you can see which side the momentum is on just by that engulfing candle, etc., etc. If it creeps back up to the level, is that a level you typically resell? So the one which had a recent fake out above it, is that still a valid level of resistance for any type of trade? Is that just a context setter?
The 11.4 level?
Yeah.
I mean, it depends, right? Like, let's say we close at 10.6 this week, or like in this kind of area, and then get like some kind of scammy. It always depends how we get there, right?
Sure.
Like, let's say we slowly walk into that level, you slowly walk up, but you can kind of see the strength, and you can kind of see that there's actually like buying interest there.
Vertical accumulation, right?
I don't want to see vertical accumulation because that could get smacked down, right? I want to see like if this kind of crawls back into that resistance, then it kind of opens the door for like a pop into 14K, because a lot of people would start like whenever you have something to walk, like whenever you have something like this, right? The parabolic movement, you have people that try to short it all the way, right? So these kind of movements, they kind of like to blow off top, right? Whereas a straight up movement from support into resistance, one, you don't have time to bait in shorts, and two, all the shorts that have been taking lower just capitulate into this candle, right? So if you have like a straight up candle into this resistance, even on low time frames, there's a chance that people just going to fake the move, and you don't really have a lot of fuel to kind of push it higher. Whereas if you have like a slower move up into the resistance, there's a good chance that you actually get some fuel to squeeze it higher. But it always depends, right? I mean, I don't think I would short 11.4. But if I were longing, I would probably take some profit there and see how it just acts, right? So I wouldn't necessarily want to go all risk into 11.4, 11.5, because I mean, there's a good chance that rejects at least the first try it makes on the level. But yeah, I don't think, like, for me, the entire chart, just based on charting alone, the chart looks good as long as we can hold monthly and weekly levels. And then you can turn really bearish the moment we start losing them. But why be bearish into support if you don't have to be? Because like if you think about it, right, if you lose this monthly level, and I mean, we could close above the monthly level and still go down next month. I mean, this is not a guarantee that we go up. It's just makes it more likely, right? But let's say we lose this level next month and I don't know, like go to 9.5 next month or something. You can still short from 9.5 to 7.7. It's still a pretty good move. So, I mean, I don't really mind catching or losing the $1,000 in between. So
if you're swinging for 2 or 3, right? Yeah.
Yeah. I mean, I don't mind when you have a chart like Bitcoins. I don't mind losing when you have a huge support area and you short from the top. Let's say you short somewhere in here, somewhere up here, you short and it goes down. And then I close my shorts and then it goes down further and retests here, or maybe it doesn't, but anywhere in this area, and I just reshort here. I lost this kind of move in between, but I took off the risk of getting completely fucked by it bouncing from support. Sometimes it's just, for me, I don't mind losing some of the position, or having a smaller position, or in general, just taking risk off into support, so I can reshort lower, or just in generally avoid the risk of getting completely fucked. Because if you think about it, the longer you are in a short, right? Let's say the longer you hold the short, the more chance you actually have to be wrong, in opposition to at least on assets that generally go up.
Sure.
Because if you look at Bitcoin's price history, right, you go from $1 to 20K, and then if you were short for a year in this entire history, you probably didn't make much money, right? So shorting is always kind of time-based thing where you just have a little while to short, and then if it plays out, you're happy, you close the short, and then you look for longs, or just wait till it goes high again and then short again, right? I don't think it makes much sense to just be focused on, okay, I want to get the short and then short this for 5 years, because really that's just a waste of your time.
Yeah. Yeah, I suppose in a, when we say in a bull market, you should be, or, if the market's bullish, there's no shame in paying up for a good entry, right? Or for a high probability entry. I suppose it works the other way as well, right? If it's overtly bearish, there's no shame in paying down or taking a later entry for higher probability. I mean, I agree with that.
Yeah.
But I was going to also ask on the, so about closes, right? So someone listening may think, well, look, if you get the monthly close above support, so does that mean you will just market buy as soon as it turns, midnight on whatever day? Or could you provide some context? Because I wrote about this a little bit with my directional bias article, but they're too long and nobody reads them anyway. Sad face, tiny violin music playing. So perhaps on live stream we could add some depth to that. if you're using or relying to some extent on candle, and I know it's different for everyone, this isn't some golden rule, but for someone who's successfully used this, right? If you have candle close context in your trading system, especially high time frame candle context, how does that turn from a kind of signal, close above, close below, etc., to an actual trade? Is it like, okay, closed above support, so I'm buying spikes, closed above support, so I'm going to just market buy at midnight? Am I market buying consolidations or breakouts? Could you just give us some hints as to how to take action on closes which give you a directional bias?
Yeah, I mean, I can just use the example of my short trade.
Sure.
So, like, I shot a 12K, it went down. I was like, okay, this is bearish as long as it stays below this on a closing basis, right? So, as long as it closes below 10.6, I was going to continue being bearish, right? It didn't do so. It closed above 10.6. It closed at 10.9. So, I was like, okay, there's a good chance that I'm wrong here. And where's the area where I can close my short? Like, if I was thinking this is going to squeeze immediately, then I would have closed my short immediately. But I didn't. So I was like, okay, I want to get out of my short. Or like, if the opposite was true, I want to get long. Where do I like kind of do that in the best possible way? And then just look at areas where you would like lower time frames or even high time frames, right? So for me, for example, I just set bids to close my short position at high time frame support, right? So we broke it to the upside. I knew like 10.6 was gonna, like if there's a good chance that it flips into support. So I just set bids there. And I mean, you could do the same for like longing, right? Like if you're trying to, you see, okay, pair has been invalidated. I want to get long. And you just look for a shakeout or any kind of entry that you can get on the lower time frames. And I mean, you talk about those kind of like entry triggers and that kind of stuff often enough, right? So like if you get a lower time frame entry trigger on something that did something that you wanted to see, like on a closing basis on higher time frames, I mean, that's what you take. So for example, in this case, let's say you see the close above on the weekly and then you're like, okay, I want to be a buyer. Where can I get long this, right? And then you just look at the low time frames, at daily here, for example, you're like, okay, the high time frame is bullish now. I want to be buying this or this support level. Okay. Or maybe even both. And then you can do that. Or you can, like, it depends on what you think the market is going to do, right? Like sometimes you get a close and you're like, holy shit, this is just going to mega moon. And, I mean, for example, the monthly here in April, you get a close at support. You're like, okay, holy shit, this is just going to mega moon. And then you can just market buy into the close. That's fine. If you're like, okay, the market isn't entirely decided yet, but I think it's bullish, then you just set your bids somewhere where you think it's going to reach, but a little bit deeper, right? You don't always have to just flat out market buy any closes. I think in general, that's probably a bad idea because usually what you get is even if you get a bullish candle, you get a wick on the next one to the downside or to the upside, which just gives you better entry.
Yeah. So I suppose the insultingly simplistic version is high time frame closes will offer evidence of direction, and then the way you actually take action on that evidence is by jumping down a time frame or two and trying to catch a spike in the expected direction. So if it's a bullish close on the monthly, weekly, you're looking for daily / intraday support to be hit and to hold, and vice versa. Is that roughly correct?
Yeah.
Okay,
I mean,
I think that's helpful.
It obviously depends. Like if you're mega bullish and you get a bullish close, you can just market buy, I think.
Yeah. Especially if you've got risk definition on the
like you get like a really nice close, and then you're like, holy shit, I have like a really nice setup here, and even if it dips, I don't really mind. Then go for it.
Yeah, I agree.
Yeah,
I think I'll just leave a like on the video if you found that helpful. But on a serious note, I think that kind of stuff's really important because candle closes are pretty ubiquitous, right? They're just a thing that everyone watches, and the levels we all watch are the same as well. So I don't think there's too much edge just to be derived from having the same levels and the same closes as everyone. I think the better trades and the way to actually take advantage of it is by having some semblance of a system which tells you what to do once a close has taken or not taken place. So that's why I wanted to kind of pick your brain on that. The final thing I want to ask is on the daily time frame. Could you see this being a higher low being set right now? Or like your view on market structure, is this like valid?
Yeah, I mean, technically, and that's the funny thing, right? Because I have to limit myself. Like, if I looked at this from like a technical point of view, this would be one of the most bullish things I've seen in a long time for Bitcoin, right?
Flip your profile picture. Sorry, yeah, go on.
Just looking at it from like a technical view, if I like kind of include my view on all the markets, it kind of turns into, okay, I don't know what to do. I don't want to be too bullish at 10K. I don't want to be too bullish into the global macro situation. But like just based on the chart, you have a low here, you have a higher low here until that kind of gives out. That's a pretty good, like this could be the bottom, for another move higher. I generally think like, I don't think we're going to 20K. I think we're lucky if we get to like 14 and then sell off big time. But yeah, like just based on the chart, I could see this be a higher low and then it going up. But if it starts failing, right? If it starts losing 10 to whatever, all these supports on the downside, I think there's a quick way down to
the high time frame target. Yeah. You're still technically moving between monthly levels, right? This is something I tried to argue, probably unsuccessfully, like most things in the last session, where I essentially said that a lot of the high time frame traders get a rough rap on Twitter simply because their targets tend to be like really high or really low, and that brings with it this perception of being unrealistic. But in my view, it's just kind of the price you pay for looking at high time frame technicals, like 14K Omega Bull Tard and like 8K Omega Bear Tard. It's like, well, these are just the levels on the chart on the time frame that I'm trading, right? No one's saying we get there in one candle. It's just that I'd expect the market to gravitate towards one area or the other, depending on how things turn out. So it's not as psychotic as it may seem. I think looking at your chart here, there's probably, I don't think the market's going to be nice enough in that regard, but if I were a gambling man, some sort of bullish continuation entry through your red box probably isn't the worst idea in the world. If you get something decent, I just think the top of that range is mostly hosed out. We've done all the trading that we could reasonably do in there. It's a bit of a made up phrase, but I just don't see much resistance at 12K compared to the levels below it and above it, which I think are much better. And also, it's a very suspect pattern. Again, I agree. If it's not a higher low, then it's toast. But generally, when you get a rally into a really, really big bearish retest level, like your red box, and then the most the market can do is put in a higher low in relative terms, that's always something that sellers should be wary of, right?
Yeah, I totally agree. The thing is, like this retest, I think shouldn't have happened if it was like super bearish. Like generally, you don't get these kind of. I mean, I was bearish into this, but I was like, okay, this like
So was the newsletter. Link in the description.
Yeah, but I was like, I don't know, like if I want to stay like in my short, like even at like 11K, I was like, okay, it's probably gonna get rejected here, but I don't know if it wasn't like if it wouldn't be like wiser to just get out and just chill it out, because usually when you get like a mega obvious top, right, and you kind of break down like this, you get like a tiny bump up or like anything really, like a small kind of retracement. You don't go immediately back to the pattern and then sell off. And like, I mean, if this happened, like you said, if it just sold off and then immediately broke down, then you could say, okay, it's a bearish retest. Rarely happens in my experience with like crypto.
Not in these, yeah, man. Really, I agree with you. When you get those sorts of clear breakdowns, it's really the intraday traders who kind of catch the bounce, but it very rarely comes back to retest the big level itself.
Yeah, I mean, if you think about like back in like at 7.3, 7.4, you had this breakout, and you never revisited it, right? And then you just kept on going up. And here, for example, you had this breakdown, and then you stopped away from the level. I mean, there's resistance here, yes, but like people were waiting
to quote that. Sorry, yeah. Go on.
But like people were waiting for this, right? And that's pretty much the exact same up here. Like we should have gotten rejected, like at 10.6, 10.7. Instead of at 11. Like usually, I mean, it's not always, sometimes you get a clean retest, but I mean, in my experience, it's very rare. So I was already like a little bit on the cautious side. And then, like I said, the weekly closing above support and then the monthly having the potential to do so as well, just kind of makes me worry.
I think like if you trade crypto, and you don't have a lower time frame momentum continuation entry in your toolkit, you're really, short selling yourself or selling yourself short or change. I don't know how to speak English. You know what I mean? You're doing yourself,
Yeah.
you're doing yourself a disservice, right? Because it's something I had to battle with a lot and come up with setups and ways of doing things. It still works on high time frame levels, like they will get retested, but what you'll often notice, I think 11.4 or whatever is a good example of that. Let me actually bring up my chart for a sec. You can keep your
Yeah.
screen share, it's cool. They're separate tabs.
Okay.
So I think it was on the weekly time frame. One sec. I could be completely wrong here, but just from memory. Yeah, so look, this is a really good example. So the 11.4k level, which I've got delineated as the highest close here, I'm going to make that in red. So if you're looking at it on the weekly time frame, it just looks like, well, okay, it was acting as support, and then the market closed below it at that big engulfing candle, and we like haven't come back to retest it, right? Which is okay. So there's no bearish retest on the high time frame, blah blah blah, all that kind of stuff we're talking about. But I remember looking kind of in disbelief at the hourly chart and seeing that there was a retest, which was actually super clean, and why I didn't get on board that. There are no good answers to certain questions in the universe, and this is one of them, right? So this is a really good example of the concept I'm talking about having lower time frame momentum continuation entries in your toolkit, because this is a really good example, right? Same level, 11.4. On the weekly time frame, it just looks like we pretty much shat straight through it, but through an intraday lens, and again, this isn't anything too crackheady, it's not the 1 minute, the 5 minute, we got like an hourly retest of the underside of that level before selling off. So if you're not in a position or you don't have any tools that will let you at least be cognizant of this type of price action, then I think you're going to miss out on a lot of moves between high time frame levels. So a lot of the time, I think when we talk about, oh, this got broken, it didn't get retested, etc., a lot of the time it's simply correct when the market does just break a level and vanish. Happens a lot in crypto, but I think at least half the time or often enough, it's a time frame issue where it might look like the monthly, the weekly, sometimes even the daily didn't retest. It's more of the fact that it did retest. It's just the window to capture it in a fast-moving market is lower, and accordingly, your time frames also have to be lower. Do you agree with that at all? Does that match with your observations?
Yeah, definitely.
Okay.
I mean, you just get a little time to do stuff in crypto.
Yes.
Like you see the market be bullish, and if you don't act on it, the shit just runs away from you. And the opposite happens with like bearishness, right? You see bearishness, you see this head and shoulders, like, okay, I'm going to get short tomorrow. Like you see this setup and it sells off a little and you're like, okay, I want to get short. I'll just wait a bit. Right? I mean, you miss it out and then you literally miss the entire move because I mean, that was the move. And then if you got short anywhere besides these 2 days, you're underwater, right? If you think about it.
Yes.
Like, it was literally just 2 candles that you got, like 2 days of time that you had to short. Otherwise, you're right now underwater.
I remember that candle. I bought it. You know what? Do you ever look back and think like, this is off topic, obviously, right? Because what else am I going to come up with? I'm all out of original ideas. Do you ever think like we're really shit at Casual Friday sometimes? It's like, oh, hey, Casual Friday. Then it's like in-depth lecture analysis type of bullshit. We need to start like playing video games or cooking or like doing something non-market oriented. Because I feel like the full kind of I don't know. It's got a very serious vibe to it. Maybe the audience doesn't mind. I'm sure they'll let us know in the chat. But a lot of the time, it's good content. But I'm like, damn, dude, this is just like any other day. It's doing the name of the live stream with the service. You ever get that?
Yeah, I mean, last week was pretty casual, but then again, we had like guests and stuff. But yeah, I mean, it depends on what people want to see, right? I think people are happy with seeing kind of serious stuff. But yeah. I could also see them be happy with just shooting the shit. I don't mind either way.
Totally. We just need to get coronavirus over with and then come do like a cooking Casual Friday or bake some cookies and shit and do something.
Yeah, I'll let you do the cooking and I'll do whatever else is left.
Yeah. I want to look at ETH real quick. Because I think it's one of those weird things where just purely technically, and again, it's still like looking bouncy, etc. But purely in terms of structure, I think ETH looks worse than Bitcoin at the moment, which, if anything, adds weight to the argument of if the markets are going to rally off of this, and bullish monthly close and then the momentum continuation, whatever, in the first couple of weeks of the next month. A weak Ethereum and Bitcoin looking stronger into those high time frame closes gives more weight to that argument of Bitcoin outperforming, right? And I think purely technically, I'm just like showing my screen right now. You know that we've got it in the newsletter as well, that 380, 390 ETH resistance. It's that swing low from April, and then also the breakdown or the consolidation before that big weekly breakdown as well. I'd just much rather long through there. Like the issue with Bitcoin, and it's not an issue, but just purely technically, on the higher time frames, for me, ETH is much clearer in terms of if this breaks, I want to get long. Whereas Bitcoin is slightly less clear on the weekly time frame with regard to if this breaks, I want to get long. That's at least my personal view. So just kind of following up from what we talked about in the last session, I've got monthly and weekly resistance at like 380, 390. You could round it up to be the 400 area if you want. There's nothing wrong with that. But the weekly context is still that we there's this big area, 380, 390. Let me actually zoom in a little bit, just so I don't want to be sued for eye strain. Okay, so this big area, 380, 390. Initially, it was used as support, which is when I started doing all my shit posting, like, oh, when's ETH going to go to 500? Fucking idiot, right? And that level was acting as support. Fantastic. And then you just got, like, probably one of the most bearish closes that you could make up, in my view, right? Because you had that crazy high volatility week, which spiked the entire consolidation and the 3 weeks that came before it. So spiked that range high and then closed decisively below that entire consolidation. That's about as ugly a weekly close, I think, as you can make it. Yeah. And really, the past 3 weeks of price action haven't changed a whole lot of that. We essentially had a bearish retest of that same area, the 370, 390, which was acting as support, and that's kind of still where the market is now. Now, I agree. I'm kind of preempting the bullish counter-argument that, well, look, you've had the bearish retest and the market hasn't done anything yet. There's been
That's what I wanted to say just now.
Yeah. I'm like, my system is totally sympathetic to that. I think when you get a really good bearish setup and no one steps on it, that's technically bullish, right? Yeah. But timing that ends up being really bloody difficult a lot of the time. Especially when you're trading high time frames, like where one candle could be a week, could make all the difference. That something like that is really easy to mess up, which is why in an ideal world, you'd say, oh, look, bears have had all this time to be bearish, and now they're not, so I'm bullish at resistance. You just end up arguing some pretty questionable points, I think, until the technicals line up. So as discussed, for me, any break back within this range, above 380, I think 394 is the newsletter level as well, maybe even 400, if you want to be conservative. Anything through there that basically mitigates or invalidates this bearish retest we've got going on right now, I think is super good, and I'll look to get long that into at least the top of the range at 433. But then likely at that point, if we get back within that range and the bearish retest show evidence of failing, at that point, I think bull goggles back on, and it's the move towards higher time frame resistance, which is pretty hard to identify on ETH. We talked about the top of that previous range at 669 on the weekly. I know you've got like this 800 level going on, etc., etc. But I think just to remove the lines for a bit and provide some context as to what we're talking about, I can literally draw 2 lines, which will kind of do the trick. So one is this 360, 370 level, this prior swing low, which is a monthly level as well, lowest close, and on the other side of it, the highest close at whatever 700, right? So what have we had right now? We had a close above it, which acting as support. That close failed and got nuked on the weekly, and currently acting as resistance. So if these technicals are going to follow through, this price action above, where I was posting about 500 ETH, was obviously the top, the deviation, the failed break back within the range, whatever you want to call it. At the moment, we're just retesting this same level, just from the underside, having put in some sort of high, and then the next level of support is in the 300 area. Again, lots of ways to skin this cat. But something like this, 290, 270, 300, basically where market structure broke, that would seem to be the reasonable conclusion or consequence of a bearish retest. But obviously what that means is since we're dealing with these two levels, I think it risks being a bit of an inception thing. Was okay, bullish breakout which failed is bearish, but then bearish retest which failed is bullish, and then you kind of just keep flipping back and forth while the market does nothing, which is fine. The context changes, but basically long idea is something like this: break back within the range, invalidate the deviation and trade higher. But at the moment, until I get some strength at this boundary through 390, I still think it's you end up being bullish, a bearish retest. So I kind of want to see how ETH develops and catches up. Do you want to throw up your ETH stuff and let me know what you think?
I can yet. Am I still sharing? Yeah.
Yes, you are. We're also 94 likes, gents. Thank you for all the fantastic support and casual. Appreciate you spending your Friday with us. We don't judge, right? I mean,
I was just about to say. I mean, it's Corona times, right? So you have an excuse. You're actually doing social distancing, right? So I mean, can't. I
don't know. If 300 people in one room we'll just hide it from the regulators. It's fine.
The thing with ETH right now, I like looking at this chart. I'm glad I'm not bearish on it or like short it, because really, I don't want to be shorting an asset that just goes straight up, and the first breakdown it just starts wicking back to the upside. Like fuck that. I definitely wouldn't want to long into that resistance. That's a little bit of a tall gamble, I think. But really, this doesn't look bearish to me. This candle was, and the reaction afterwards was, but this kind of wicking action, and I mean, technically we've already retested support, so maybe this is all we get, right?
Yeah.
I wouldn't want to touch it. I wouldn't want to long it here. I wouldn't want to short it here. I would want to long it above 400 probably.
Yes.
Just based on a technical kind of, just based on the technicals. I mean, 400 seems kind of crazy, but I mean, it is what it is, right? That's kind of how crypto goes. You see crazy prices and then they double, and then you're like, holy shit. And then they go down 90%, right? But
then you deactivate your Twitter.
Yeah, but in general, whenever I see something like this, right? And I mean, you could argue, okay, yeah, perfect bearish retest, and I completely get that. And I don't think it's wrong, but in these kind of cases, I just don't want to do anything with it, because
you end up in limbo, right? It's technically bearish, but not bearish enough for me to want to sell, but not bullish enough for me to buy resistance, right? So
I mean, if it goes lower, right? If it goes to support at 270 to 250, I mean, I might buy it, right? Mm-hmm. If it breaks through resistance, I might buy it, but I'm not interested in shorting it. Sure. If I shorted 475 or whatever, the top. Pretty much.
Oh, you didn't?
I mean, I'm not even sure if I would have held that to this point. But if I did, I mean, you have an easy invalidation, blah, 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 right? But giving back that profit sucks. I don't know. For me, this is a chart where you're just okay, I'm just going to wait and see. Yeah. Sometimes it's you don't always have to be in a position, right? And looking at this chart, I don't want to be in a position.
Sure. I mean, that's kind of what we concluded in our writing as well. Right, and I know I keep plugging stuff just because it makes it easy for reference point, and the newsletter's free, so I don't feel that bad. But the easier trades, or I think the more reasonable or faster moving trades, however you want to classify them, are above the red box or at the green box. Right, that's sort of what we settled on. And anything in between is you end up playing this devilish loop of bearish retest fails as bullish, at resistance as bearish, and you kind of hate your life.
Yep. And I mean, ETH is just even more at the mercy of global markets and Bitcoin is. So it's kind of we're all just kind of watching the global markets. And the thing is, whenever that happens, right? Whenever you have a correlation in crypto or in Bitcoin especially, and then people just rely on it and just trade based on that, it's often the case that it breaks and people get completely fucked over. Mm-hmm. So I wouldn't even trust that too much, right? I mean, we have correlation. It's been going on for a while, but I wouldn't trust it long term. If you just keep on playing it, at some point you're going to get wrecked. And the first time you're going to get wrecked on it is probably the time where you want to stop trading it. So I mean, I've traded low time frames using the dollar index, using the SPX, using gold, and kind of using the fact that there's a lot of people just watching this correlation, and then
it's like self-fulfilling almost, right?
Yeah, you have like some tailwind, right? Like if you play short time frames and you're the first one to notice something, like let's say you notice for the SPX, right? You notice that it's a huge weekly support down here. I mean, if you long Bitcoin at that point, right? If you notice it as the first person, you just get like the SPX bounces. You get the tailwind of all the people that try to kind of do the same thing that you did. Just like you can play that, but at some point it's going to fail. And I'm not sure if it's going to fail to the up or downside, but I'm expecting it to fail at some point. So like the first massive loss, or like the first like full-sized risk loss that anyone takes playing this kind of correlation, I think is where you just stop doing it.
And that'll probably be the trend shift or trend continuation, whatever point as well. I think those sorts of, I think it lends itself well, that approach to like shorter term trading, right? Especially if they're moving like tick to tick or just really close. If you just milk like a short term edge off of it, like a higher volume of trades, then the one time you're wrong doesn't really matter too much as long as your sizing or whatever has been reasonable throughout. I think the bigger issue is when you try to build like a macro view of the correlation and you're not making any money kind of following it, and then the one time you do or whatever and you end up being wrong, then you haven't even got those smaller wins to fall back on that justify it or mitigate it. Do you know what I mean?
Yeah, fully agree. I think like the crazy thing is like the only reason why so many people are bearish Bitcoin right now is because of the correlation. And the thing is, you have the SPX as massive support, right? It's just like, and I mean, I get the thinking, like I said, that people think, okay, a lot of people are suffering right now globally. You have some kind of weird shit going on where you don't know how the future is going to be. So this should go down, right? But that's not necessarily how it works, right? This is the eternal Ponzi.
Yes.
This shit's been going on forever, and kind of assuming it dooms is very, very rarely like gonna help you out.
Yes.
So, I mean, do I think this is gonna like a lot of like, for example, Tesla is gonna go like significantly lower? Yes. But I mean, it's really hard to time that kind of stuff. And
if you can't time it, then you're fucked.
Yeah, and then if you extrapolate from that and you're like, okay, Tesla should go down, so Bitcoin should go down. I mean, you're just asking to kind of get wrecked at some point, I think. Or like the opposite too, right? If you're saying Tesla should go up, so Bitcoin is going to go up, I mean, you hear how crazy that sounds, right?
Yes.
But the longer the correlation goes on, the more sane that kind of seems to people. And then the moment it turns off, they get completely rolled over. So it's just a word of caution with like the correlation stuff. If you have like a bear thesis on anything or like a bull thesis on anything that relies on like an entirely different market, I'd be a little bit cautious, or like at least ready to change the bias the moment.
Yeah, like your sample size has to be kind of shitty, right? You can't have really high conviction, at least in my view, if that's your main driver. Maybe I'm wrong. That's kind of where I'm with that.
I mean, it's happened so rarely, right? These kind of correlations. And it's funny because like the moment we get correlated, people get really bearish. And it's been the case that that's been the bottom for in here, right? We've gotten like stupid correlated between, I mean, the drops also correlated, right? But I mean, Bitcoin just dropped a shitload more, but we've stayed correlated at like 4, 5, 6K, right? And a lot of people traded that correlation and made a lot of money with it, and then tried to kind of still do it, and Bitcoin just ran off. And the crazy thing is like now it's happening again where you have like this crazy correlation, and then people just try to milk it. I don't know if it's going to run off again because like Bitcoin at 5K is very different from Bitcoin at 10K. But I mean, I wouldn't feel too comfortable if that was the only reason I was bearish.
Yeah. And you'd expect some sort of like technical alignment sooner rather than later, right? Or some sort of technical context to inform that decision, or at least kind of a sliding scale as to how much faith do I have in this. It's something that's been, you know, a cornerstone of how I view these things when I build even just a purely technical thing. Alignment is so important. Like, if I'm correct, is this over time looking how it should if I'm correct,
Yeah.
right? And if the
Yeah.
answer to that is repeatedly no, and not only is there an absence of evidence in your favor, but strong evidence against your position, that's usually a red flag. I've actually got an article. God, this live stream is just me self-owning. I do actually do some good stuff from time to time, like get stuff right. But there is an article which I wrote, which is Diary of an Offside Bull, which happened at 9600, another top. But in that, I essentially go over that idea, how you could use the technicals for, to build a case or have some sort of directional bias, etc. But if you don't use other tools, or at least reassess that view as the market evolves, you'll see, especially when you're trading high time frames, you'll get some pretty good evidence and indicators, if you're patient enough, as to whether your idea is going to resolve positively or not. Again, it's not the most perfect thing in the world. I'm sure you and I have both seen setups which look, mega doom, and then it looks like it's about to reverse, and then your original idea plays out completely and just wipes out all the progress made. Right? I know that does happen, but I think generally that exception to the rule is not a reason, not a valid reason for ignoring signals that shift the balance one way or another. So long story short, yeah, there's the article on Medium. Go read it, and I think I go into decent detail about what we're talking about here with regard to alignment, be it on time frames, technicals, or just markets more widely.
Yeah. But I mean, I do want to say, and I mean, it's always like I'm in this weird limbo where I want to be bearish based on everything that's going on, but I can't because the charts are looking good. So it's not like, okay, here I'm like this perma bull right now. Like I'm just waiting because a lot of people, like I make comments that sound bullish or bearish or whatever, and I'm speaking like a week or month, like even a month in the future, and people just take that as okay. This is going to happen, whatever he thinks like we're going up from right now. I could see this weekly actually go down a little, right? And then close at like 106. So, I mean, this is just like, I'm thinking like if we hold these supports, the charts are bullish. And then whatever else you make of that, right? Like, let's say we get what a lot of crypto people seem to think, which is like complete doom across all markets. I mean, Bitcoin is not going to be the one that is going to survive that. Like, I mean, survive, they're all going to survive it, but like go unharmed out of that. Like, I think if you get like a massive kind of down move on everything, Bitcoin's going to follow suit. So you do have to, and this is kind of annoying in my opinion, since Bitcoin's been getting larger and larger, you have to actually watch other markets as well. So it's not the crypto bubble anymore. We're actually like even the fact that we have had correlation like the last 2 times that I talked about, or like we've had a little bit more correlation along the way. But the fact that it's getting higher and higher, I mean, it's super annoying to deal with because technicals kind of get mixed up. But it's just something that you have to keep an eye on. So
yeah, and it's what traders and investors and just about every other asset class have to deal with, right? So yeah. I guess it's time to grow up.
Yeah, I mean that's the thing. Like we were in the lucky position that we didn't have to, and now we're in the position that we have to. So if you want to trade this kind of seriously, you kind of have to know stuff about other markets as well. And I mean, I'm going to be the first to kind of admit that I don't know enough about a lot of other markets. So I'm researching, looking into stuff, and I can only kind of recommend for the traders among us anyway, to kind of do the same. If you're an investor, right, and you're thinking Bitcoin's going to outperform in general, you don't really need to bother with that kind of stuff because, I mean, you just have your Bitcoin, you just hold it, right?
Fun life. You know what makes
I mean,
me
that's fine dude? Too.
Yeah, I know, of course it is. It's like different time preferences and stuff as well. Or maybe you can be like the micro strategy or whatever that firm is called. Who try to cope their way out by buying Bitcoin, but that's a topic for another. I read a really interesting thread about that, and it doesn't look great with regard to the context of the company and justifying it as investing, as an inflation hedge. There's some pretty interesting details. I'll try to link the thread like in the comments or something, but I don't know. I feel like with fundamental events, especially like in the short term, you need to have a plan for what to do if they are completely meaningless, right? Like the halving is a good example of that. Do you remember the price action around the halving? It's like basically nothing, right? Just like an absolute nothing burger. And this is one of the most anticipated events pretty much, on the calendar. Now, yes, you could make arguments as to, well, it's really the lead up to the event, etc. But I feel like marrying narratives, and especially ones where you think you can predict direction, like a directional outcome to those narratives, is really difficult. Especially because it's like the old meme, like, oh, China bans Bitcoin or exchanges get hacked, the number go up. Like, it's hilarious, but it's also quite telling that there are no kind of clear reads when it comes to narratives, not in the short term as well as the long term in many cases, right?
Yeah, it's not easy to do. We've had a few good questions in the chat, so I think we should
Oh, sure, yeah, let's go for it.
Should I? So, Corona Bulldog asked about the expiry of future contracts, like $1 billion worth of Bitcoin in future contracts expires today. How do you see this affect price? What do you think?
Specifically futures. I mean, I haven't looked at that myself.
Yeah. So what we do have like is a huge futures options whatever expiry coming up.
Is it options or futures expiry or both?
I think it's both. I'm not entirely sure about the option part, but I'm pretty sure. Like I talked yesterday with a friend about it.
Is it the OKEX stuff?
As well. No, it's like they're a bit of everything. I think I'm not entirely sure. I'm not up to date on it, but from what I know, right? Like how I look at these things is you usually get like some violent action into that. So maybe like the past like day or two of price action are kind of going, have been kind of trading in the direction that they have been trading because of that. So for example, like the max pain of a lot of these kind of futures was 11K, right? Or close to 11K. So, I mean, you could make an argument, okay, we only went up because that's where max pain is. I don't entirely subscribe to that, but I wouldn't make like any kind of grand calls based on futures expiring.
Yeah, I'm pretty similar. I've seen like arguments made about how large, specifically options expiries, can have a dampening or sometimes completely opposite effect on volatility, depending on how that's the composition of those options, the expiry, etc. I would be completely full of shit if I were to say I either have an extremely clear read or use it as an edge or anything like that. It can sometimes inform like the context of the price action, like high or low volatility periods or some longer term stuff, but it's not something that would like get me into a trade or get me out of the trade. Is about as authoritatively as I can speak on that.
Yeah, I mean, I think that's fair to say. Like I don't really have an edge on it as well. Like I look at the data, I see that's interesting.
Listen to smart people. Like, yeah, cool.
Yeah, I mean, that's kind of what I do. Like, if you have like someone that is good in that regard, right? If you know someone that knows the options, I mean, that's usually what I do. Like, I have some good friends in the option department, and I just ask, and they tell me what they think.
Yeah.
So I was told 11K is max pain. I've been told that like 3 or 4 days ago. I was like, okay, we're like weekly support is we kind of close to our weekly support, so I think there's a good chance that we go up.
Okay, so it can be used for some context confluence if appropriate, right?
Yeah, but it has to be like context wise. Like you have to kind of look at it in the context of we're at support or like, and I mean that's the good thing, right? You can just use it at Confluence if you want to, and I mean having more data is never bad. So. But I like if you ask me like what exactly is going to have more like how exactly it all works, I have no idea. I just ask people that are really good at that stuff, and then kind of interpret that data. So
yeah,
I mean
that's about the extent of my use of those tools as well. Set some expectations for volatility potentially, and flag some prices on my radar, which might add context to the technicals. That's about it. That's a good question.
Yeah, and then there was another one that asked about like trying to maximize, like whether we're trying to maximize USD or Bitcoin.
For me, generally USD.
Same.
That's it.
But I mean, it used to be like for me generally, and I mean it might sound weird to a lot of people but like in this run up, right? I was trying to get as much Bitcoin as possible. And I mean, like in hindsight, it seems obvious, right?
Sure.
But for me back then, I was like, okay, I have way too little money in this space because I was pretty poor. Like I was all in, but I was pretty poor, right? So I tried to maximize the money that I had in this space. And then further it got up, the more crazy I perceived the market. So I started taking out money more and more and more. And ever since then, honestly, like ever since 17K, I've just been going from, okay, like I put money into the market to, okay, I only pull money out of the market. So I don't really put in fresh new money. I just trade and then take profits into USD. So it's clearly trying to maximize USD. And I mean, my trading gains are usually converted back into fiat money. But like for some people, they still have that feeling that they don't have enough exposure.
Yeah.
And I think in that case, try to maximize your BTC. That's completely fine, right?
For me personally, depending on how you think, whether the market's above value, whatever that means in your subjective framework, also makes sense to skew your prioritization. I know you do a little bit of that.
Yeah, I mean, if you think like Bitcoin is going to 100K, you'd be kind of crazy to only watch at your USD value, right? Because in that case, like if you're certain it's going to 100K, you're obviously still going to have to put money out of the market, because if you don't, I mean, there's never a risk-free bet that you can take, right? I mean, Bitcoin could go to zero tomorrow, something stupid happens, and if you're all in, that's kind of fucked up. So if you can't deal with that, right? I mean, some people can deal with it. Like I've talked to people and they're like, I can deal with it. If it goes to zero, it goes to zero, right? I have like conviction that it won't, but if it does, that's fine by me. And then you have these people that are like, okay, I'm all in, and it's going to 100K and it's 100% never going to zero. And if it does, then I'm fucked. And I don't think that's the best kind of way to look at it, because if you're in that kind of position, you're selling these bottoms. You're selling at 4, 5, 3, because you're like, holy shit, I'm all in and
my life
wrong.
is over. Yeah.
And
this may be completely observational or anecdotal or AKA pulled out of my ass, but I think that like purely observationally, right? I've noticed a kind of cyclical trend with these things as to whether to go for more BTC or USD. It often takes a similar shape, and again, I'm not advocating for it. This is just kind of, something I've seen, is when you start out with like a lower, net worth or whatever you want to call it, you're going for, most people just, enter crypto, they want to get as much Bitcoin as possible, right? And once they kind of progress to the next level, they're like, oh my God, I can materially change my life with what I've done in this, whatever, market, and they become more USD oriented. And then when they have a bunch of USD, they're like, well, I'm kind of a wealthy person now, more or less, or certainly in comparison to where I was, and I'm going to invest, right? And now I want to increase my net worth, and I just have too much fiat lying around that I don't want to put in a bank, and you kind of come full circle. Maybe not as aggressively towards maximizing towards Bitcoin, but at that point you're kind of managing a portfolio, and because you're crypto native, it's more kind of crypto and Bitcoin skewed. That's a life cycle I've seen happen as well, which I don't think is the worst idea in the world.
I mean, I think like most people in crypto, and I mean, I say this with like 99% certainty, are like heavily, like from a traditional standpoint, heavily overinvested.
Sure.
But then again, like, I mean, most people in crypto think that that the traditional kind of way to go about these things is completely wrong, right? So it makes a lot of sense. But then if you go from like, okay, you're pulling out money because, like you said, it can change your life. And then, like, for example, for me, I'm still like traditionally overinvested in this space. Mm-hmm. I'm just not like as crazy as like most of the other people that are among us.
But I'm not like other girls.
No, but like I'm not fine with having 80% of my net worth in crypto anymore. And I mean, because I'm not fine with giving like everything that I've made in the last few years back. And I mean, everyone has to kind of judge how much they're willing to give back. I mean, I don't think crypto is going to zero, right? Don't get me wrong. I'm just saying, like, there's always a chance that it does. And in that, like, even like, let's say you think it's a 0.1% chance, right? Which I think is fair to say. Like, I mean, any kind of crazy bug that gets found that is completely unexpected, or like or Satoshi coming back, right, and dumping coins. I mean, it's very, very unlikely that happens, but if you're not fine and if you're not kind of like enjoying life after that happens, I think it makes a lot of sense to just kind of take a step back and reevaluate. But I mean, that's just how I go about these things.
Yeah, I think that's reasonable.
And yeah. But then again,
at
like,
that point, it's just financial planning, really, isn't it?
Yeah.
Like, you know, if any market kind of really goes to shit, I still want to.
I still want to have
something, right?
Yeah, and if you think about it, like, there's a lot of people, that don't do it. And the funny thing is, like, I wouldn't have done the same. Like, if I told myself in the past, like in 16, 17, this exact same thing that I said right now, I would have said, yeah, dude, shut the fuck up, boomer, right?
Yeah.
So it always depends on kind of where you're coming from, right? If you had a student, like I was in 16, 17, you don't have that much money. You don't really care if it's gone or not. I mean, fuck it. Do whatever you think is best, right?
Yeah.
If you're a family man that kind of has to feed children and whatever, maybe it's better to kind of do sound financial planning. 100% okay. GTFO, yeah. I mean, that's fine.
That last sentence just became a financial advice live stream. That's it. Channel cancelled, sponsorship over. That's it. We're gonna see you in cell block B.
Shit.
Nice. Any final questions you want to get to?
Someone asked about like investment strategies for long term, like whether to DCA, a high time frame dip buying, etc. Like I don't really subscribe to the scaling into and out of positions, because like if you think about it, right? And I mean, I can show this on the chart, right?
Oh my god, it's mooning!
Yeah, dude, it's mooning. So you have price go like this, right? And you're like, okay, I wanna buy the dip, right? And I'm gonna just scale into this. Or the same thing, obviously, on the other side, right? Let's say you wanna buy the rip. Sell the rip. Sell the rip, right?
That's my trading strategy in a nutshell. Yeah, buy the rip.
So I mean, this dumps, right? If you're right and it dumps, there's a good chance that you don't get fully filled, right? So you have like a partial kind of position. Like, I mean, this is like one of the best cases. It kind of goes through your bids and then reverses, and it doesn't fill you completely, but most of your bids, right? That's well and good, right? And you're like, holy shit, this is pretty nice. I got like a pretty good average. The thing is, like, if you're wrong, your position size is bigger than if you're right. So, I mean, that kind of just sucks from the get-go if you think about it. Like, the moment you're proven wrong, your position size is huge. And the moment you're proven right, there's a good chance your position size is pretty small. So, I mean, if you kind of spread these out over a large distance, I'm not really a fan. Like, some people do it and some people do it well. I've seen a market maker or like wannabe market maker post on Twitter with like exactly this. And they were talking about almost getting liquidated in like this price range here. Not this price range, in this price range down here. But I'm like, okay, dude, this is exactly what I'm talking about, right? Because the moment they were proven wrong, and this broke out, they were really heavy. And the moment they would have been right, they would have been not as heavy. So, I mean, this kind of just asked to get like the worst kind of position in any case, in my opinion. If you're just like randomly putting your bids and asks somewhere. But that's my opinion, like my personal opinion. I don't like the scaling in stuff. It's obviously if you do it for liquidity sake, I mean, that makes sense, right? If you don't want to scare people off with like a large order, but I don't think that's the case for most people in here. So yeah, I mean, there's a big downside to just increasing your position size the further wrong you get. But yeah.
Fair enough. Yeah, I don't see anything wrong with that argument. I've seen some other like statistical analysis and other arguments about like DCAing just a hyper trending volatile asset just doesn't make much sense. But again, I'm not authoritative on those matters and wouldn't dare comment on specific investment, whatever advice, strategy. If you want to get exposure and your personal circumstances are reasonable and allow for it, I don't think trying to, especially as an investor, trying to time or outsmart the market or like get the best entry, none of those things are really in your purview, or at least they're not your priorities. So I think getting some exposure is probably better than just sitting on the sidelines forever and waiting for the time to do it. Because at that point, you kind of turn into a trader who's put in a position to execute, and that kind of causes more problems in itself, right? And the worst case, you get some exposure, it's offside, well, you still have some sort of job, some sort of income, you live a life, and you just buy more later, right? Not in this kind of sequential, split up, whatever way. You just park some, throw some more cash at it when circumstances reasonably allow. I think not overcomplicating it and not trying to... Again, like when you say, oh, like I'm an investor, and then they just talk like traders all the time about entries and check the chart every hour. It's like, no, you're fucking not, right? I think if you avoid that, you're in a much better spot than most, and probably not overthinking it if you're an investor as well. Because if you're overthinking it, you're playing trader.
I mean, the thing is, like, if you think about it, like, you're an investor because you're bullish on the space, right? And if you're an investor and not a trader, you just buy it.
Yes, exactly.
Like, you don't need to do anything fancy, because let's say you're like an investor and you really want to get long this, and then you're like, okay, I really want to, like, I only want to buy this at this and this discount, right? And you're really bullish though, and you don't have enough exposure or whatever. What you're doing then is you're just sitting there, you see price go up, and you're just buying the top after like having watched it go like up 50, 60, 70%, and you're just completely frustrated. I mean, from my experience, that doesn't really work. Like, if I want to invest in something and I'm bullish on it,
just do
it. Yeah, I just
That's
do
what
it.
kind of market orders are for, right? They're there to, when you're taking liquidity, you're expressing like some sort of urgency more often than not, right? Whether it's to get out of a position or get into position immediately. So this idea that you can hold really strong views about a market, but then you're waiting for like the perfect entry, limit order, this, that, etc. How bullish are you, right? If there's no immediacy or urgency, yet your conviction is super high, like one of those is wrong, at least in my view. But I'm not a financial advisor. I'm a 23-year-old pretending to be an old man on the internet, so fuck do I know.
Yeah. I mean, shit's just, like, as an investor, shit should be simple.
Yeah.
I mean, you should know like why you like it or why you don't. As a trader, this stuff's never simple. You should try to keep it as simple as you can, obviously, because the more you kind of make it more difficult to or the more complicated you make it, the harder it is to fine tune. Because let's be real, like let's say you have like 20 million entry triggers and you have no fucking idea what's going on.
10 indicators saying different things.
Yeah, you never know like what the problem is, right? So if you start simple with like trading and then fine tune that and then add and fine tune that and then add and fine tune that, that's completely fine. If you start out completely like with like way too much, you have no idea what's helping you, what's harming you. That kind of stuff doesn't really help.
Yeah,
so,
totally agree.
Yeah.
And look, I've been trading levels, like literally horizontal support resistance stuff, essentially since I started after a short purview in some other trend following strategies. You can go to my channel and like videos from like the end of 2017 or like mid 2017. You'll see it's a very similar stuff, like horizontal support resistance levels. And 3 years later, I'm still using that same foundation, but always still to this day, refining stuff, making improvements and making adjustments. So it's not like when you make things more complicated, you've somehow graduated past the simple stuff and now you can use all these other tools. There's nothing wrong with it. But I'm saying that mastery of the basics doesn't have like an expiry date, in my view at least.
Mm-hmm. Yeah, I completely agree.
Or you and I are just too stupid and bad at maths to learn how to trade properly. So we essentially rely on luck and random chance that these boxes do something in a way that allows us to make money. Who knows?
I mean, I'm down with that as well. Like,
I'm down with that as well.
If you're saying like I'm blessed by God and this is all luck, I mean, fuck yeah.
Angels
give
touch.
Me that. Give me that. I mean, it could be, right? Like, that's the crazy
Fooled
thing.
by randomness, right?
Like, chance is such a crazy thing. Like, could be that we're just mega lucky. Who the fuck knows in the end, right?
Yeah, I mean, if Dentosha replies to my DM, then I'll subscribe to that. But until that
Oh
happens,
shit! I don't think that's gonna happen, bro. I think you messed it up. I told you start with my lady, then maybe, but
yeah,
you messed it up again.
listen, this is an off-stream conversation, okay?
No, okay.
All right. Well, we've been going for a minute
Too
now.
long.
Yeah. Well, yeah. If we get to these sorts of topics, then yeah, definitely too long. But look, I think it's time to round up. First things first, thank you to Bybit again for sponsoring Technical Roundup, the newsletter, the YouTube channel, the podcast, the in-person workshops, all this stuff that doesn't exist. It's really just the newsletter and the YouTube channel. But thank you to them. Their links are in the description below. Show them some love so I can have bread and water. That will be good for my body and soul. Like the video if you've learned one thing or learned not to come back here, but still like your like. Makes, helps us out a fair bit. And hope you all have a fantastic and safe weekend. Pubs here are closing before 10. And there's a 6-person rule and all this other stuff that I'm unaffected by because I just sit in my room, or in this case, my sister's room, because I've got no internet at home. Life is a box of chocolates. How about you, Duck? Any final comments, notes, complaints,
No, I
insults
don't think so.
of the audience?
I mean, I'd love to insult the audience, but can't think of anything.
Well, you were bearish the whole way up, right? I mean,
oh shit! Here we go again.
Okay. All right. Thank you very much for your time, Duck. Always nice to talk with you as well. And we will see you all on my Monday session.
Yep.
Thanks for watching.
Bye bye.